Marco was kind enough to reschedule a flight today so we could jump on here.
Yeah, I pushed it to later this afternoon so I could do a full hour plus on this webinar. So
And
we're
you're
good.
headed to Santa Clara today, correct? So you're doing the
Yeah.
Aspire event. Yep.
Yep. Flying up to San Jose. We have our next Aspire event tomorrow in San Jose. So it's a full 1 day event with some great content, great speakers, and we will probably have again 2,000 people in the room. And it'll be an
Yep.
exciting event, and that just feeds into some of the businesses that we own and run here through Norada Capital. So it'll be another exciting, energetic full day of fun and content and speakers and education and all that good stuff. So
Yeah,
yes.
I like to see that for a West Coast event too. I like to see that 2000 plus mark. Do you know who's speaking this weekend or today?
uh yes, let me just pull it up because I'm getting some of the events mixed up. But San Jose, well, Santa Clara, we have let's see, Santa Clara, we have Gary Vaynerchuk, good old Gary V.
Yep.
Very interesting guy. So we have Gary Vaynerchuk. We have Robert Herjavec from Shark Tank. The guy on the far end. Really nice guy. I like Robert. Molly Bloom. We have Joe Montana, and then of course Eddie Wilson, Andrew Cordell, Dan Fleshman, David Meltzer. So we have a great lineup.
Sure. That's a great lineup.
Yeah.
Good to see Joe Montana. They took some regional guy there. So, and hey
Yeah,
guys,
he's
welcome aboard. I can see you guys still come into the room. We're just taking a second. Mark and I were talking about the Aspire event this week in California. Obviously, Aspire is one of the major components of Norada Capital Management that leads into some of our educational and mastermind spaces. So, well, we might as well kick it off here. Get
yeah.
started, Marco. So welcome, guys. My name is Nate Hall. Maybe you've talked to me on the phone a couple times. Obviously, without further ado, we have Marco Santarelli. Marco is the founder of Norada Capital Management. He's the founder of Norada Real Estate. He has been an entrepreneur and business owner for 2 decades now. And this particular webinar today, we like to do once a week. This is a frequently asked questions. Sometimes we have content and we do topics like self-directed IRAs or the growth of the e-commerce businesses like we did last week. Today is just a general session on, we're going to talk about kind of an overview of Norada Capital Management, promise note investing itself, or what's called a 506C Reg D offering. So we can work with accredited investors. We'll get into that. But today's going to be a general overview of the fund. We'll do some FAQs here at the end of the explanations. So feel free to use that chat box or the Q&A box. You can put a question into the Q&A box. We'll receive that, and sometimes we hit those during the conversation. Sometimes most of the time we hit them at the end. So again, my name's Nate Hall. I've been with Norada for 3.5, 4 years now. I've been in the real estate world for over a decade. I've bought, sold, owned real estate. I've lent private money. I've borrowed private money. I've done rehabs, and that ties directly around capital management because it's really nothing more than being a private money lender, which you'll see here in a second. So I'm well versed in this arena. As far as, Marco's position in this, I'll let him do an intro for himself in a second here, but I always like to let people know Marco has been a major influence in my life, watching him grow these companies, watching him grow Norada Capital and Norada Real Estate. He works his absolute tail off and probably one of the more integrity-driven humans I've met in this space. So, Marco, if you want to take 2-3 minutes or however long you want, I guess, to give a little bit about your background, the ownership and the start of Norada, the Norada companies, I think that would be a great place to start.
Sure. Yeah. And thanks for all the kind words. And,
Yeah,
Nate, as you were talking here, I got thinking, we do these webinars every week for Norada Capital. I got thinking, why don't we do a webinar, maybe even once a month for Norada Real Estate and talk about,
100%.
well, you have so much experience in real estate. I have a lot of experience in real estate, having done everything from buying, fixing, and flipping to buy and hold to apartment syndications and all that kind of stuff. It's like, why don't we just start doing some FAQs on the Norada Real Estate side?
No doubt. I
Just a
agree.
thought.
I agree.
Cool. Well, I'll just give a very quick intro. I'm a serial entrepreneur. I have been since I was a teenager. I just turned 55 this month, so it's my birthday month. And I've been working my tail off building businesses and brands. A lot of it is under the Norada brand. Norada Capital and Norada Real Estate Investments are the two primary businesses, and then those are kind of like the the suns in a solar system. Then there's businesses that orbit around those two core businesses. And Norada Capital specifically, which is what we're talking about here today, it itself is a private equity firm. It invests in a multitude of different business ventures, and also has assets under its belt on the balance sheet. But essentially, it invests in high growth businesses that are typically young, not necessarily startup, and those are very scalable businesses that have very, very high profit potential and the potential for very large exits. And we can talk a little bit about that. One example is Pier 1. Pier 1 Imports, very well-known brand. We actually own it and acquired it. What I mean by that is the intellectual property. So technically we own everything, the whole kit and caboodle. Bodybuilding.com is another asset. Our money is Mastermind. These are all unicorn businesses. But from the outside looking in, it's an investment fund. You invest, you earn 12, 15% or more through that. So these are the things that we're working on and building, and very exciting. So that's just a very quick intro on myself. Nate, just to kind of tie the loop on something we were talking about earlier, I just looked up the count for the Aspire event tomorrow up in Santa Clara, just outside San Jose, which I'm flying out to here in a few hours. As of 5:44 a.m. this morning, we have 2,319 people
Wow.
registered and attending. So it's more than I thought. I thought we were going to just touch 2,000, but we'll probably be at 2,500 by tomorrow morning. And we're already on pace to far exceed 4,000 people for Dallas, which is still over a month away.
Yeah.
These events are getting much, much bigger. It's pretty exciting. So
no doubt. Good.
Yeah.
And we'll dive into that in a second here in terms of like a big portion around a capital, guys, which is mastermind education spaces. A lot of people don't understand that model. We do have a webinar specifically catered to that model as well. Maybe we'll do another one here coming soon in 2024, maybe update that. But if you want, Marco, I have the investor slide deck pulled up. If you want to kind of go through the current holdings together, and then we can kind of talk about, well, maybe we start with a promissory note. Once to do that, for those of you who are brand new to this space, who maybe have never invested in a credit offering or invested in notes, maybe 45-second, 60-second overview of just a promissory note would be good, Marco.
Yeah, and I know some people who attend these webinars, which by the way are recorded, and the links will be sent to everybody, but it's always good to just stay on if you can through to the end, because you might think of a question as Nate and I are talking, and we can address it here live for you and for everybody else. But some people are like repeat webinar attendees, and that's great. And so this is repeat for you, but I'll give the quick and skinny on what a promissory note is. A promissory note is kind of a weird name or term for what is essentially just a loan agreement. It's a simple contract between two people, two parties, a borrower and a lender. They're used all the time, every day, all over the country, whether it's a student loan, a signature loan, a car loan, any kind of loan is a promissory note. Sometimes it's called a promissory note. Sometimes it's called a loan agreement. It varies. Even a mortgage loan is essentially a promissory note, but it's never referred to as that. It's a more extensive document, so they call it different names. A loan agreement is one of them. But all it is just a document that says that the lender is lending X number of dollars to the borrower for a certain period of time, whatever's dictated or determined in that agreement for a certain rate of return. That's usually an interest rate, and that could be paid monthly, quarterly, annually. It could be a balloon payment. It's just the document just outlines the terms. In our particular case, just to kind of, put full color on the answer to your question of what is a promissory note, we issue a corporate promissory note, something that's used every single day of the year. Businesses always raise capital, and when they're raising debt capital, they use a promissory note, and it just outlines the terms. And in our case, it's just a note that allows you to choose a term from 3 years up to 7 years. Technically, we could do up to 10, but 3 to 7 year term with a $50,000 investment or above. It pays you either 12 or 15% per year. It's paid monthly. It's a direct deposit, goes straight from Wells Fargo from our account into your account, automated every month. We don't have to do it manually. It's just set up and it's just automated. And that's it. It just outlines everything in that document, including disclosures. So we're happy to send you a copy if you haven't seen it and you want to review it. Nate can send that out to you.
Yep.
That's it. So that's kind of a long answer to the short question of what is a promissory note. But a promissory note is just simply a loan agreement,
Yep.
two parties, and outlines the terms.
Love it. And one thing to add to that in terms of the terms, we can do it as short as 2 years, right? So it can be 2 to 7 years. And the one thing we need from you as long as for that longer term is a letter of accreditation, right? Or again, it's called a 506C Reg D. So we need an LOA, a letter of accreditation from you. Third party verification. Our attorneys like to see that third party verification. So whether it's from your CPA or lawyer, verifyinvestor.com, wherever that might be. So
Nate, sorry to interrupt you.
Yeah, go ahead.
Dr. Robert asks a question here, which ties right into what you were saying. So maybe we
Great.
can just grab that question and then we can go to Geyer. I don't know if that's his real name or if that's just a acronym.
Yep.
He's got 3 great questions there as well. So we're getting some good questions coming in. Some of them, it's funny, we get them every single week. It's the same questions every week.
Yes,
It's
very
awesome.
true.
So if you don't mind, let me hit up Dr. Roberts' question real quick.
Absolutely.
So Dr. Roberts says, I would like to invest 50 to 60,000 with you, but I am not an accredited investor. Can I still invest with you? So let me give you a 2-part answer on this. Our main fund is a 506C filing, and it is specifically and only for accredited investors. There is a loophole, but our securities attorneys have basically advised us to say, look, just keep it clean, stick to accredited investors only. But hey, let's set up some sister funds. They're what are called 506B filings. They allow us to take on 35 non-accredited investors per fund. And so because we have so many non-accredited investors that are sophisticated and have capital to invest, but don't have the ability to invest because they're not accredited, or in some cases they don't think they're accredited and they actually are. It's actually surprising to see how many people actually are accredited and don't realize it. So let me explain that as well, because I think for Dr. Robert and other people listening to this, it's probably good to know whether you actually are or not, because sometimes you are and you don't realize it. But the short answer is that our main fund, Norada Capital Management, is for accredited investors only. But if you're not, and we have what's defined as a quote unquote pre-existing relationship with you, and you can talk to me and my team or Nathan about this, Nate, you may be able to invest with us in one of our sister funds. So don't think, especially here for Dr. Robert, don't think that you can't or might not be able to. You might be able to. It's just, it might have to be through one of our sister satellite funds. But you're getting the same benefit. So in fact, the returns can be actually a little bit larger for you. But anyway, talk to Nate about that. So I want to throw this out there. Some people think they're not accredited, and they are. And here's how I put it out to them. You need to there's 2 ways to be an accredited investor. One is you have an income, depending whether you're married or not, of $200,000 to $250,000 per year for the last 2 years in a row. If you don't meet that income qualification, the other way is to have a net worth of $1 million or more. Now, here's where people get tripped up on this. It cannot include the equity in your principal residence, meaning your home where you live, but it does and can and should include absolutely everything else. So you need to actually stop and think, like, run this through your head. What are all the assets, anything and everything that you can liquidate that has value, that is worth something, that contributes to your net worth? And here's the big one that people miss often. A lot of people are either self-employed or they have a small business or they have equity in a business, even if they're not the operator. That has value. For example, if you have a small business and that business has a marketable value of $1 million, and you're not carrying any loans on the business, like it's truly worth $1 million, which is not hard to do. You're already accredited, because just the business loan, let alone the real estate, the cash you have, the IRAs and self-directed accounts, just the business alone qualifies you as an accredited investor, because you own that business. If that business is worth $1 million or more,
Correct.
and that's not hard to find out, you're accredited. A lot of people don't count their businesses or their, you know, their professions, whatever it may be. So anyway, something to consider. I just want to make that clear because a lot of people are accredited and they don't realize it.
Yeah, and to add to that, on the actual promissory note, like the sample promissory note we sent people with the disclosures and everything, there's a long list and description of accredited and what like the different criteria you can hit to be an accredited investor. So
Mhm.
you can find it on our note or even on online, of course. So
Yeah.
yep, great question, Dr. Robert. Get with us on that. Feel free to email in. If anybody has any questions, of course, you can go to noradacapital.com, fill out the information there, request a conversation, request an email. It's quite simple. Um, if you've been getting our emails or you got this email to join this webinar, you actually absolutely have our email addresses there. So real quick, Marco, I wanted to let's revert back real quick if we could before you jump in any
Mhm.
more questions about the actual holdings itself, right? So let's take Robert's example. Let's say he invests $50,000 in a note with Norada Capital. What's backing that investment? Like what assets or holdings are backing that? And that's where I can share my screen if you want, and we can kind of work through this. Or if you want to give an explanation, you can do that as well, Marco.
You can share your screen. Are you using the updated investor deck?
Yes, I have the updated one that has Ron Fossum, our new CFO, on there. So
Use that one because I've updated the asset categories. So let's go with that.
perfect. Okay.
Okay.
So I'll pull it up here on my end and then has obviously the current holdings so we can, I
Okay.
just need you to allow me to share my screen there.
Oh, you can't? Oh, sorry. Make co-host. I don't know why I have to do this every single week. I should just do it by default.
Yeah, you would think that Zoom would allow you to do it just in general. So
Actually, you should just sign into the webinar every week and then bring me on as a
there we go.
panelist.
Could do that too.
All right.
All right. So let me move a couple things around here. So you guys should be able to see all that.
Yep.
All right. So go ahead, Marco. I guess we can start with the current holdings in the e-commerce space and the businesses and a quick explanation of that. So
Yeah, so I don't know if people can just see the screen, like the presentation that you have there, which is part of our investor deck, or if they can see us as well, because I know I can see you and you can see me,
I
but
think they can see us as well. Yeah.
and they okay, cool. Okay, so Norada Capital has 5 categories of assets under management. There's basically 5 categories of businesses and ventures that we capitalize on and invest in. The first one you see on the screen is the e-commerce businesses. Now, this is a collection of businesses that we acquired the IP from. In some cases, we actually own the entire business, not just the IP. But today, these all stand and run as viable businesses that are operating and generating sales. So the most prominent ones here are Pier 1, Dress Barn, and bodybuilding.com. Pier 1 used to be a $1 billion business. It was actually sold twice for close to $1 billion, plus or minus. When they filed for bankruptcy, long story short, when they filed for bankruptcy, we made them an offer, gave them an LOI to purchase their intellectual property for what was at the time $21 million. It ultimately went up to $31.5 million, but we essentially took possession and owned Pier 1. So Pier 1 was a major, well-known brand across North America with stores throughout the country. Great product, great brand, great reputation. And we were fortunate enough, I'll be honest, we were fortunate enough to actually grab that asset. And so today we run it online entirely. There are no brick and mortar stores, and we are growing and scaling it. We generate sales every day. It's a profitable business. We have, officially as of the end of last month, it is a debt-free operation. So it is cash flow positive going into 2024. The nice thing about that is we're going to grow and scale that business to become, what it was before, and we will probably open up some strategically located brick and mortar stores in different places around the country at different times, but that's not, a plan for this year or maybe even next year. Ultimately, we may spin that off as a publicly traded company, which will be a very lucrative exit for Norada Capital. The same plan is in place for Dress Barn, and bodybuilding.com is an international brand. The previous owners of bodybuilding didn't know how to grow, scale, and market that business. It has so much international potential. And now we're in talks of, we're starting talks about creating our own custom product lines, like our own nutritional lines and all kinds of stuff for that. So that's another what I call a unicorn
Hmm.
that has the ability to be a billion-dollar business. And by the way, as a side note, we actually purchased it from a billionaire who held 50% ownership in that business. We held the other 50% ownership, and then we negotiated a $2 million buyout. We bought the other 50% of it for $2 million, and so now we own bodybuilding.com 100%. So anyway, that's category one, Nate. The e-commerce businesses, it's kind of a bit of an eclectic mix, but
It is. And for those of you who see some of these names, and Marco mentioned earlier, the brick and mortar side of these businesses, a lot of them were going bankrupt, and Marco and his business partners saw the writing on the wall, made offers, and basically did a 180 on these and turned them into e-commerce businesses. So for those of you who didn't hear that piece on, the buyout and the switch into e-commerce, that's where these brands are. So you guys can go. I encourage you guys to go to pier1.com. Click on the top of the page there. There's like a ticker tape bar that shows all the different businesses, so you guys can see that. All right, so number two here. These are another unique kind of unicorn business, the mastermind education companies. So
yeah, and you know what? I also want to point out that with every one of these categories, Nate,
yep.
I could spend over an hour
Oh
or
yeah.
two talking about each one separately and individually. So, we're kind of just giving, a good overview of each one, just to kind of paint the picture of what we're focused on, what we're building. So,
Yes.
yeah. So I mean that we could do a whole webinar on ecom, right?
Yeah.
So the mastermind educational businesses is very interesting. This is another very fun, exciting category. And what I need to add on here is the Aspire logo as well, because
Yeah.
Aspire is like where we bring 2,000 to 4,000 people into a beautiful, amazing, energetic, lively event every single month in a different city. Tomorrow is Santa Clara, California, just outside San Jose. We already have 2,200 people registered for that event, and we're going to break that, by the time we get there tomorrow morning. We have Gary Vee and all kinds of great people coming to speak. But the Aspire event drives people to both the Money Is Mastermind and Think Realty Mastermind. It's a very rich content environment for people to learn about money, how to make it, grow it, and protect it. And also make and earn money tax-free, tax-deferred, or tax-free forever. And these are just advanced tax strategies that have been used by the uber wealthy for decades, and it's just not taught in schools, and it's really not taught freely out in the open public. But we want to educate people, so we give them free education, but then they also come into our master classes and our masterminds, like the Money Is and Think Realty Mastermind, where they learn more about money and how to build it, protect it, and all that kind of stuff. And these are just things that we do, but are not openly taught. And so Money Is and Think Realty are, very exciting, lucrative businesses that are growing rapidly and becoming big name brands. The Aspire Tour is the top of our marketing funnel, where we bring people in. Power Room is our 5-star mastermind. It's a $30,000 a year mastermind, where we have very successful, high caliber, quality people that are part of that mastermind. And if you think you're a fit for that, or you're interested in more information, just contact me or my team. You can go to powerroom.com. It's the old website. We are rebuilding that website. Thanks for pulling all this up,
You
Nate.
got it. Yep.
Yeah, we're definitely rebuilt. Actually, we're in the process of rebuilding this right now. It's just not live, but we definitely have movers and shakers. So this is part of the mastermind category, along with Think Realty and Money Is. Those are the brands and the businesses that we're building right now, and it's very exciting. 2024 is going to be a huge year for us. It's just great.
Yep. And
So
guys, you can go to any one of these sites like I'm doing right now. I was just showing you the branding, showing you the actual the
Yeah.
actual businesses. So you guys can pull these up. You can look into them. I think it's important for us that you educate yourself on all these. So and these are the different these are the so you have Aspire at the very top, right? So Aspire events then drive traffic and people into more into Money Is and Think Realty. And out of that, there will be some people that likely apply and join Power as well, I would think. So um,
Yeah, what's interesting is our Aspire tour is kind of like a marketing funnel to bring people into Money Is primarily and then Think Realty secondarily.
yeah,
But what we are finding is that people who come into the Money Is master classes and then ultimately the mastermind are such quality people, and many of them are high caliber people, that it itself becomes the funnel to Power Room. So
correct.
we're bringing people into our ecosystem, our world, because they're achievers. They want to be successful, and they kind of filter themselves through, and then join other things that we offer, like Power Room as a 5-star high caliber mastermind. So
Yeah,
yeah, it's great that way. So these are all, very profitable, high quality businesses that have strong margins. Money Isn't Think Realty, especially. And again, we refer to Money as a another unicorn. That can become a $1 billion business. So
yeah, love it, love it. Yeah, and guys, feel free to obviously do what I did. Follow the path there, and you can go check out those websites. You want to move on to the next kind of category here, Marco, in terms of the
yeah,
real estate piece?
yeah, and I'll just touch on the rest of it quickly so we can get to some questions. And the reason is because those first two categories make up the bulk of what I'll call assets under management. So the e-commerce businesses and the mastermind businesses make up probably um, about 85%
Yeah,
of our assets.
yep,
Okay, so touching on the rest of it real quick. So BRD Land and Investment is really a land acquisition company, but we don't bank the lots. We actually create what are called paper lots. These are saleable lots that we sell to nationwide home builders like DR Horton, Stanley Martin, and whatnot. They want to buy lots to build houses on, but they don't want them on the books. That's not their business model. So they don't want to spend the money and have the land sitting on their balance sheets. So we basically acquire it, entitle it, and then sell them the lots. And then, we can generate, 10 to 12 to $15,000 profit per lot. And we had a good year last year. This year is going to be even better. And it's just, we have the wind in our sails because there's such demand for housing and a lack of housing right now. There's a shortage in housing that builders are trying to build as much as they can, as fast as they can, and they need the land to do it. So really the demand for buildable lots is high. And, we're one of those premier sources for buildable lots. We don't have a huge equity position in that company. And in hindsight, I wish I had made a larger financial commitment to that business, several years ago, knowing what I know today. But that's just hindsight. Imagination Vacation Rentals is just a start of a company that is there to build what are called extreme Airbnbs, which are basically very highly themed vacation rentals, short-term rentals. And they're great because they generate premium rents and their occupancy rates are very high. So it's basically separating yourself from all the other Airbnbs
yeah,
to have something that is, very unique. In Pickleball is now being rebranded into Pickleball. It is not only a premium industry magazine for the pickleball industry, which is the fastest growing sport in the United States, has been for years, but it is also becoming a media company. So it'll have a website with a membership and subscription model, which gives it a higher valuation and more profitability. And then this is kind of the sexy part of our holdings. It's the theatrical productions. The theatrical productions are predominantly all Broadway based musicals. Two of these are running live right now. A Beautiful Noise, which is the Neil Diamond musical. It's we just celebrated our 1 year anniversary on that. And then Harmony, which went live about 2 months ago. We opened up 2 months ago. And then we're working on several of these other ones to open up both this year and next year. And this is kind of a fun space. It can be very lucrative. Usually it just gives you a favorable return. But 1 out of 10 will be a home run. It'll knock it out of the park, just like Hamilton and many others. So when you hit one of those, it basically is a really fun ride. And then last but not least, we just have a small holding of Bitcoin and Solana just as a hedge against inflation, but also has high alpha. So it also can potentially be a moonshot, but we don't we don't just bank on that. That's a very, very small portion of our assets. Really, the top two categories were the main categories. So,
Love it.
all right,
I
that's
will. I'm
that's
going
a
to stop the
lot.
screen share here so
Okay.
we can get back to some explanations. But I know if I'm considering investing in something, I appreciate the explanation and the walkthrough. So thank you for that, Marco. And I think it's important for anybody who's considering putting capital with us to understand at least on the 500-foot level, what Norada Capital Management owns and operates. So with that said, if Mark, you don't have anything else to add, we can jump into some questions. Is there anything else you wanted to mention on the holdings prior to
No, not
Q&A?
unless there's questions, because like I said, with every one of those categories, we can talk for 1 or 2 hours each.
Yeah.
So we'll just leave it open for questions.
Which we do have. We have a webinar that's about an hour on. We did an hour-long almost e-commerce webinar last week, which should have been sent to you guys. We have about a 45-minute to an hour-long webinar on musicals and theatrical productions. We have an hour-long webinar that we've already done on mastermind education companies. So we actually have 3 webinars on those spaces that we've done. It wouldn't hurt in 2024 to do another theatrical one and probably another mastermind one, since we just did e-commerce. But
Okay.
all right,
Yeah.
so let's jump into some Q&A here, guys. So Guy R has 3 questions here that he's pulled up, and our Mark, I'll start from the top there.
Okay.
He says, why do people use promissory notes when bank loans have lower interest rates? We get that question every week as well. Great question. Marco has a very good explanation on this as well.
Well, the answer is pretty simple. When you look at banks and financial institutions, you've heard the saying, when you have cash and you don't need to borrow any money, that's when they want to lend it to you because,
Yeah.
you check all their boxes. And they just know that they're lending you money and it's very little risk to them. But the thing is that most businesses, especially startups and small businesses, every day around the country are always raising capital when they need to grow, scale, or go to the next level. And they do that with private money, private capital. So they're raising capital one of two ways, either through issuing shares and selling equity to raise capital, or they're raising capital in the form of debt through promissory notes. And that is just how businesses can grow and scale to go from a startup to a stage 1 business, from a stage 1 to a stage 2 business, et cetera, et cetera. So it's very common for businesses to raise capital this way. And the reason they do is because most businesses, unless you're a well-established, mature business with anywhere from 2 to 4 years of history and strong financials, strong books, strong financials, you're not going to check all the boxes from a bank or lending institution in order to qualify for bank financing. And even if you do, a lot of times the amount of capital that they offer is relatively small, and they usually lend for operating capital or capital just to help grow your business, or for inventory, the purchase of inventory. They don't lend capital for businesses that are what I'll call quote unquote new ventures, like they're trying to make acquisitions or grow as a new business venture. So we definitely wouldn't check all the boxes for a
Yeah.
bank or lending institution, as most businesses don't. So this is why we use promissory notes. We're raising debt capital to grow and scale our existing business portfolio. Um, I mean, that's the long and the short of it. It's that most businesses don't actually qualify for bank and institutional financing.
Yep. All right. We had a couple people ask kind of the same thing. So if you go to the second question from Guy there,
Sure.
what historical default rate has Norada experienced? Who absorbs such losses, Norada or the investors? Good question. We're talking about risk here, which is a very this is the right question to ask, right? As investors, we always obviously want to look at risk. So how would you answer that, Margot?
Yeah. So fortunately, knock on wood,
Yeah.
we have a zero default rate. We've never defaulted on a note. Notes are all current. Many notes have been paid off. And all the notes, including current notes, are being paid at each and every month, on time like clockwork. We use Wells Fargo Direct Pay. The payments are scheduled. They go out at the beginning of every month, usually on the first. They drop into your account on the first or the second. Um, I personally started issuing notes as far back as 2012. So just over 10 years ago, 2012, yeah, just over, well, almost 11 years ago. And those were project specific. Those were for various, syndications of different kinds. But those all those ventures worked out. One didn't. We returned the capital to the investors because we just couldn't make the deal, couldn't close on the deal, couldn't make the deal work. But there's never been a default. And anytime there was an issue with a note, this goes back years ago with real estate based investments, and some in the commercial space. The notes were ultimately paid. We just found a way to either return the capital or liquidate the event. But yeah, there's no default. There's no defaults and there's no default history. What absorbs the such losses first, Norada investors? I'm not sure what he means by that.
Well, that kind of goes along with Brian's question. Somebody just asking about like if there's risk, if something happens, right? Who absorbs that loss? Like what happens if, let's say, worst case scenario, there's a black swan event or something like that. What's Norada's position? What's the investor's position? We obviously don't want to get there. It's all the disclosure in that language is written into your note, by the way. It's in the packet. But
Yeah.
does Norada Capital offer equity? Does it offer shares in that case if something defaults, right?
Yeah. Yeah, I guess the answer to that would be this. Obviously it falls on us first and Norada. So if we're in a situation where we need to repay some notes and we need to liquidate some of our assets, when push comes to shove, that's probably what we would end up doing because all of our assets are worth, much more than what we acquired them for in the case of the e-com businesses.
Yeah.
In the others, there's definitely a market value there, aside from, cash flows and revenue. So, so we would figure out a way uh, to um, to either refinance, reposition, or liquidate some of our assets in order to cover notes. But the other thing too is, this, and you hinted towards this, Nate, in the note itself, there's language in there that allows us, if we want to, not that we want to, we don't, but if we needed to or we want to, we can issue equity in the company. We can issue you shares and equity in the company that's equal to or greater than the value of your note plus, whatever accrued and owing interest there is on that. And that would probably be lucrative for you. Not something we want to do, but we have the option to do that, and the mechanism is in place to do that if need be. So
Yeah. All right. Thanks for the question, Guy. Another good question here about investing from a tax deferred retirement account. Is earned interest tax deferred? Absolutely. If you're using, a self-directed IRA, whether it's Roth or whether it's traditional, and those returns or those payments are going back into that self-directed IRA or solo K or whatever that might be, that's either going to be a tax-free income for you or tax deferred. We actually make the payment directly to your IRA custodian or directly to your self-directed IRA itself. And until you take a distribution on that capital, right, that's when the tax hit usually happens. So good question there.
Yeah. The only thing I'll add to that is that if you do have funds in a self-directed retirement account of any kind, whether it be an IRA, a 401k, a Roth account, anything like that, take a close look at what you've got going on, because a lot of times you are not really maximizing the returns within your retirement account.
Yeah.
You know, you might be getting a return from the equities or the stock that you own, but you know, take a close look at what your real returns are in that account. And you know, especially if you have a larger account, it may be a wise decision. I'm not giving you financial advice, but it may be a wise decision to take a portion of your retirement account capital and turn it into monthly income, and you know, a 12 or 15% return using our promissory notes. A lot of people do that. We have a lot of people who are with, you know, Equity Trust or Advana or Quest or whatever it may be, and are getting that 12 or 15% annual rate of return in their retirement account, and that's either tax deferred or tax free, depending on whether you have a Roth or whatnot. So take a look at that, because you know, it might make sense for you.
You bring up a good point. I did a webinar, I don't know, a month or so ago on the use of the actual income that people create through a promissory note. And we hit on that exact subject. So a lot of times what people do is they'll make that 12 to 15% in their self-directed IRA, and then they'll use it to reinvest in, you know, maybe another project, or they'll pay down a mortgage balance on a non-recourse loan inside their self-directed IRA, or they'll take that 10 to 15%, you know, annually, and they'll invest it in something else. Like, so it's like they're compounding those earnings. So you bring up a good point there, Marco.
We've got a lot of questions coming in.
Yeah, coming in here. Oh, thank you for your name, guy. Yeah, I like that name.
Yeah.
All right. What ABS, what guarantee do we have to recover our investment in the case things go south? Legal structure is shielding you in a way. I personally lost money doing syndication with 2Z Capital, and despite all the agreements, LP, we are still looking to recover money. The one thing to say to that is, you know, I hear you. There's always risk in every investment, right? And we don't shy away from that. We understand it's the language in our promissory note. You can put 100 grand in the stock market. You could put 100 grand in notes at Norada Capital, and there could be a hot war or a black swan event or something like that that does affect our companies. And so there is no, you know, there's no guarantee with any type of return unless you're, you know, maybe unless somebody's doing, like, I think my dad has a lifetime annuity, and that annuity guarantees him, like, I don't know, 3 or 4% a year, right? But when you're investing in higher yield private placements, there is a piece of risk that comes along with that, right? We're not FDIC insured. What we always go back to, though, is our track record. We're going back to our no default history, our higher yield businesses. We've never missed a payment. So there's certainly, you know, there's certainly risk. Are we aware of that? Yes. Another thing to add to that is we don't tie your note directly to one business venture, right? We don't write your note to one Broadway musical production, because if that Broadway musical production doesn't do as well, then your note could be at risk. Your note's tied directly to Norada Capital Management, which has the benefit of multiple businesses. So I know, Marco, you structured that specifically that way. If you want to talk a little bit more on that, please feel free.
No, you gave a great answer, and it was pretty complete. You know, I like to always say that there really isn't an investment out there that's 100% guaranteed.
No.
You know, it's nobody should ever tell you that something is entirely guaranteed. There's always something that could go wrong. This is why we have, you know, thorough disclosures to talk about all the bad, potential bad stuff. But you know, you know, you made a point about diversification. You know, we're in those 5 categories of businesses and assets, 2 of them being the major ones. But you know, a lot of investors we talk to like that so-called diversification. So you know, they're investing with one company, us, as a fund, an investment fund, but what's on our balance sheet is spread across, all these
Yeah.
different business ventures and asset classes. It's not that wide. It might look a little eclectic, but there's, a method to the madness. There's a reason why, we're involved in these things, is because, we are equity owners. We are partners in a lot of these. We do have a level of control and say. Um, so, um, and the whole thing about things going south, and recovery, to your question, AB, is, again, our assets are worth a lot more than what we started building them with, or more importantly, acquired them for. And so we have a lot of cushion there. So if push came to shove and we had to liquidate something, or some of those businesses, we could, certainly recover whatever our original investment was, plus, uh, whatever we, make on it.
Hmm.
Uh, do I see that happening? No. I mean, it's a long shot. I mean, I'd like to call it highly improbable. So, but our capital preservation is certainly important to me and to us. We certainly want to protect your capital. We're looking to leverage and arbitrage that capital, turn that into 2x, 3x, 5x,
Yeah.
10x, and that's what we're doing with a lot of these ventures. So, so it's important to us that everything runs smoothly and grows, according to our projections and our pro forma. And so far, we're pretty much on track. So, that's good. I think
Good
that covers
question,
the
AB. Thank
question.
you.
Yeah, I mean, we can get into more detail if you want to contact, Nate or whoever your investment counselor is.
Yeah. All right, Bo. I'm not quite sure what you're asking there. My question is, as far as investing, can I use securities or even a bill of exchange? You can certainly liquidate securities and use that capital to invest in a promissory note, but we can't necessarily uh, write a note um, from your brokerage account or your Fidelity account or something like that.
Yeah, if Bola, if that's a question about swapping securities you own or something else, um, you can't do a swap. You
Right.
have to invest with cash, whether it be in your checking or savings account, your business account, or your self-directed retirement account of any kind. It just needs to be done as a transaction, using cash. You just can't swap, one investment that you have with another. It's not like a crypto exchange
Right.
with that.
Right. All right. Thanks, Bola. Roger, Marco, Roger just asked about one of the e-commerce businesses there. Um, that what it wasn't on the investor slide deck that we
Yeah.
showed. So
Yeah, what I'll say about that, I mean, I don't have enough detail to go deep into it here today, and plus, there's roughly 12 minutes left here. Long story short, we did own Radio Shack early last year. We did end up losing it. It's a long story. There was an existing note uh, on the Radio Shack acquisition that we made about 2.5 years ago, and I had nothing to do with what had happened with that. But Expedia actually had a $10 million note on Radio Shack that, for some reason, and I don't have all the details, it slipped through the cracks. That note wasn't paid. Expedia exercised their right to take possession of the Radio Shack brand. There's a small possibility that we can get it back. I have to talk to my partner Raj about what's going on. I don't know if we want to actually get it back, uh, but I'll try and dig up some more detail for another webinar, so that way, I can just kind of share a little bit of the back history. I wouldn't get too hung up or focused on that. We've got so much good stuff going on right now with, incredible upside potential that, you know, I cut my teeth on a Radio Shack computer long, long ago. I used to hang out at Radio Shack. I have this love for Radio Shack just growing up with it. So it kind of saddens me that we lost it for these odd reasons that might have been avoidable. But at the end of the day, we don't have the ownership of Radio Shack, at least not anymore. If we get it back, great, but if not, it's not that big of a loss. We honestly didn't pay a lot for the Radio Shack, the rights to the Radio Shack IP, so it really wasn't a big loss anyway. It was actually a really small loss. So
Good question, Roger. Brian R., my apologies, I joined the webinar late. Your rates of return on promised notes are extraordinary. That seems likely very costly. How are notes secured since the default rate must be somewhat high? I think we've hit on this several times already in terms of how we create the rate of return. I think we've hit on the risk piece. We have no default history. We never missed a payment and during this raise. Is there anything you want to add to that, Marco?
No, for the sake of time, Brian, I will say that we mentioned at the very beginning that this is being recorded, and I went into a fair amount of depth about some of the stuff you're asking here. So I would just get the link here in the next 24 to 48 hours. And if you don't get the email, just reach out to Nate and he'll email it to you. But just listen to the first 20 minutes or so of this webinar, and I've covered a lot of these things at some depth. So you should get most, if not all, of your answers there. But of course, reach out to us if it's not covered there.
All right. Dr. Robert, can you explain how one opens an account with you and invests with you? Is it all done online? Yeah, I can show you guys right now, actually.
Yeah, do it. You take it, Nate.
Yeah. So it's a very simple process to get started. So let me just do a quick screen share here. All right. So this is an investor profile. Literally takes you 5 minutes to fill this out. If you're using, an EIN or a business or an IRA custodian, you'd fill out the note holder name here. If everything's in your personal name, you fill this out. You hit complete your investor profile. That kicks all your information to our DocuSign system. You'll get a contract within like 10 minutes. Don't need to sign it right away. I always let us know. We'll get an update when you actually fill that out. We check the titling, we check the terms, we check the amounts, make sure all the accounts and routing numbers are correct that you want to use. And then when you're ready to go, you sign that. Marco signs it, and it's a simple wire transfer, whether from your custodian or from your checking account or business account over to Norada, and we get you set up with direct pay. So, and there's what's called a prorated payment for your first payment. So, for example, I have some clients that have funded this week. They've actually funded their notes. They've sent their wire transfer in. They're going to get a prorated payment for the rest of January, but their note start date doesn't actually start until February 1, right? That first week in February. So typically we carry over the start date to that following week, that first part of the week. And that's how the process is. It's quite simple. We also need your letter of accreditation from your CPA or from Verify Investor, wherever you get that from. We file that. And then obviously if you happen to be non-accredited, that's a whole nother conversation. It's the same profile form, et cetera. But we'll have to have that side conversation about what actual 506B that we'd put you in. So, but this is, if you guys want to get the process started, it's just noradacapital.com/profile. Super simple. So, all right. Good question, Dr. Roberts. All right. Few more here. I know we're getting down to the limit here. So, Brian, what is the DD process for those whom are being considered for funding? Are the funds invested, diversified in a fund, or placed in one note? If the investor is earning 12 to 15%, how does Norada make money? Okay, there's two separate questions there.
Yeah,
go ahead, Marco, if you want to.
Well, no, I was agreeing with you. There are two questions. If the investor is earning 12 to 15%, how does Norada make money? How high is the interest being charged? And I think you're making an assumption, Brian, that we are borrowing capital from investors like you and then re-lending it out. And that's not the case. We don't make loans. We invest in businesses that we have ownership in. In some cases, we're the founders, co-founders, principals and partners in. And we were just growing and scaling these businesses to become, highly profitable, valuable, lucrative businesses that we will either continue to carry on the books as far as ownership, or have some sort of liquidation event, whether it's taking it public, or having a merger or acquisition, or selling off parts of it and recouping our principal, still maintaining equity in it and cash flow. So then at that point, it becomes an infinite rate of return. But yeah, 12% and 15% interest per year being paid to you is attractive. It's very attractive. It's by design. It allows us to raise the capital that we need in the timeframes we need in order to grow and scale the business ventures that we're in. So I'm making an assumption that you're actually thinking that we are borrowing capital and then relending it at a higher rate, and that's not the case. We don't make any loans. We don't lend capital. We arbitrage the capital. We put it to work. It comes in as a cash investment from you, the investor, through the use of a promissory note as the investment instrument, the document. And then, on the other end, we have equity positions in various ventures, which is in the investor deck that if you didn't see at the beginning of the presentation, you can get a copy. Just go to the website or contact Nate, and he can send the investor deck to you. It'll have more information in there. And then, of course, you can talk to Nate or whoever your investment counselor is here, and we can, go down whatever rabbit holes you want, go deeper into it.
All right, perfect. Thank you for the questions there, Brian. And we'll go to Roger here. So Roger says, how can I compound or reinvest the interest I'm currently receiving from Norada, perhaps add to my existing note on an annual basis? We can make an amendment, Roger, if you want to take the capital you've earned in the past 12 months and put that into your existing note, we can do that. We just can't, we don't have the ability to compound things monthly, month over month. So I'm not sure if there's anything to add to that, Marco.
No, I'm just waiting for you to pick the next question.
Okay, fair enough. Let me answer these here. So Marco, QSIP asked about, or excuse me, Bola asked about QSIP. Are you familiar with QSIP?
No, a couple of my, so if I liquidated a couple of my here, that's why Google's our best friend, right? QSIP Global Services. I'm not sure what you mean. Maybe you should circle back with him.
It's just Committee on Uniform Security Identification Procedures. He's provider.
Or maybe he can. The two of you can connect offline.
You can certainly connect with me if you want, Bola. It's just Nate@noradacapital.com.
Yeah. Yeah, because I'm not sure what that is. You want to pick the next one?
Yep. For clarification, from reading your website, I was under the impression that Norada act as a loan maker to third parties. From Marco's discussion today, I now believe that Norada is the client for these promises. Right. Yes, correct. We are actually the ones growing our businesses. Well, that Marco is equity owner and partner in, right? We are not sending capital out to make third party loans. So
yeah. So Guy, you just figured it out. Remember I said with promissory note, there's two parties, a borrower and a lender. Norada Capital is the borrower. You as the investor is the lender in that scenario. And so you are actually the lending party. We're not the lending party. We're not re-lending that capital. We're actually putting it to work.
Yeah.
And turning, $1 into $2, $3, $5.
Yeah. All right, Brian, does Norada have a physical address? We do, and it's not a UPS store, so I'm not sure why it's pulling up as a UPS store. Marco's actually sitting in that physical address right now. So
yeah, over in Orange County, California, overlooking the mountains, as you can see back here. The address on the website is where all our mail goes. It actually is a UPS store because we've got 2 mailboxes there. We get tons of mail, so that's where we collect a lot of our mail. But no, we actually have a physical office in Laguna Niguel, California, on Cabot Road. So yeah, which is only 4 minutes away from that UPS store. It's just convenient rather than having all the mail being sent here. I'd rather have it collected and stored in one place that, we can just pick up every few days. So yeah, interesting.
Correct.
Thanks, Brian.
Thank you, Brian. Let's see, Sharon here. Other options for non-accredited investors also. Are there any particular investments more suited towards Roths? Great question. Maybe you came on a bit late. Yeah, we can take it offline, Sharon. You can have a conversation with me on that. There are going to be some options here in the coming weeks with our 506B funds for non-accredited investors. I'm going to type in my.
So you're answering Sharon's question in the chat. I think we've
Yep, I'm just
covered
gonna
all.
Sharon, feel free to send me a quick email here. We can take it offline in terms of next steps and processes with that. So
Cool.
there are going to be some options, yes. So
I think we covered it.
all right.
Yeah.
Good questions today, guys. We appreciate that. We'll wrap up here. And again, if you guys have any other questions, feel free to go to noradacapital.com, fill out a form. That raises your hand, you'll reach out to us. We'll get that. And we'll go from there. Marco, safe travels today. Enjoy the live event. It was great meeting with you guys, and we'll probably see you again next week. Take care.
Thanks, Nate.
All
Thank
right, be
you.
well.
Thanks.
Bye-bye.